Hey guys, I've got Sam and Tristan with me again for this month's crypto roundtable with the three Musketeers. So let's jump on into it. We've had a great chat just ahead of this session, really mapping out what we're going to be covering in the premium newsletter at the end of this month. And if you haven't already subscribed, please do jump on. It's incredible the amount of effort that the team put into this and all the insights and certainly all the buy and sell levels and all the magic. So please do jump on in. You can just go to cryptoconsultinginstitute.com/newsletter. And we can always drop a link in as well for you to jump into it. So what we want to do in this session, we'll jump in, have a look at what's going on right now. We'll discuss obviously some key facts and figures and things coming up. And then we're going to give you the brief outline for this month's newsletter, which we're making some changes and we're adding something in that's really exciting, which Tristan will reveal at the end. So let's jump on in. We're going to have a quick look at the charts first, just to see what is going on. So we have tonight, if you're in Australia, 10 p.m. Fortunately for me here in London, I think it's 9:30 for me. Or is it 10 your time, Sam, in Adelaide? It'd be different for Tristan.
Yeah, it's close to that.
Yeah. So this evening, late evening for you guys over in Australia, for the CPI figures to come out. So if we have a quick look, we're just on tradingeconomics.com. And if you go to indicators at the top and then choose the US inflation rate. So the consensus here is 8.7. We're currently, as of last month, at 9.1. If we see 8.7, we can assume that there will be a strong drive in the market, most likely, based on those figures. We were having a chat before, and we believe that anything kind of above, really above where we are, might trigger some negativity, but the further away, obviously, the more negative. If it's above 9.3, then I think we're in a bit of trouble, and the markets will definitely come through a fairly significant pullback, I would suggest. So what would I do if I were you? I'd be, if you are in the market right now, I would probably consider putting some fairly tight stops on, or staying up to watch how things map out and what comes to fruition here. Because if it doesn't go well, you'll see your portfolio down 20% by the morning when you wake up, quite literally. And I don't want that for anyone. So that's my recommendation. Sammy, do you want to add anything to this?
Yeah, I think the market's just being a little bit hesitant, as it always is, leading into CPI data, which hasn't been too flash of late. I think last month was a record 40-year high. So to a certain degree, as I was saying to you guys before, I feel like the markets are generally pricing in bad news. So unless it is a really bad number, 9.5, 10, even above, I don't think markets are going to react too badly. But I think just going into this, the hesitancy is there and the confidence is still a little bit shaky. So it'll be very fascinating to see what number shakes out, because we know it is backward looking by a month. And we've seen over these last few months, the inflation data, commodities, a lot of the figures that the Fed looks at are beginning to tick backwards. So yeah, hopefully some of that is leaking into the data, but I don't think we see too much relief yet until the back end of the year and maybe Q1 next year.
Yeah, absolutely. And something that we didn't discuss that might be worth touching on very briefly here, Sammy, is what's going on over in China with Taiwan, US. Any updates on that you want to share high level with the guys?
Yeah. So it's definitely a macro event that we need to keep a strong eye on. I think until we see any serious conflict, I think what we said during the Ukraine crisis was sell the war drums and buy the cannons. I think that was the saying. Once the shooting starts, the markets tend to bounce. It's crazy how that works. You don't want to see that, obviously. And I think China and the US going to war is a whole different kettle of fish. I'm not convinced that's going to happen just yet. I think we just need to be wary of it. And the Chinese are very wary as well of what's happening in Ukraine and Russia. Full-on bogged-down war. There's a lot of proxies. The US are fighting it by proxy, so they're sending a lot of weapons and whatnot to Ukraine. And you can definitely see that happening with Taiwan. And the Chinese aren't silly. They're not going to just barrel straight into Taiwan right away and cause a big international ruckus. Looks like they're doing a bit of an unofficial blockade. They're doing military exercises all around the island. They're trying to make Taiwan very, very uncomfortable. So if it doesn't escalate anymore, I think markets will be okay. But if it does turn into a big miscalculation, a big accident, you know, the US gets involved, then all bets are off. You know, markets will absolutely crumble, I would think. But until that happens, you know, we're sort of surrounded by a flurry of bad macro news and have been for years now. So for a while, markets are almost just used to this sort of negativity. So we'll have to see. But I don't like what's developing there. But until we have more data and more information, I think we just have to play it by ear.
Yeah, and I think the most significant thing about Taiwan is they're the number one for chip manufacturing, aren't they?
Semiconductors, yeah. Yes, yeah. So they're the world's leading manufacturer of semiconductors. So we would all lose access to anything that requires computer chips if there is a war, and that is as well why the US are so keenly interested for their geopolitical position in that region as well. And they're trying to pivot that industry back to the United States. Currently, Intel's trying to build the biggest manufacturer of semiconductors in the world in Iowa, if I'm not mistaken, and that bill just passed the Senate. So they're looking to move that to the United States, but that's going to take time. So in the interim, if this goes down, the world will be desperately short or out of computer chips, which run everything that we use today. So you cannot underestimate the logistics impact on society. And that is an inflation driver. War is an inflation driver. So we do not need more of that.
And has the supply chain been fully cut out of Taiwan now, as in because of all the military around it, they're not exporting anything, or is the channel still open?
No, commercially, the war games are pretty much happening. Missiles, live fire exercises are all happening in the commercial sea trading lanes from Taiwan. So I'm sure they can get things through, but it's going to be very, very difficult. And you can imagine if you're a civilian vessel carrying, you know, goods and whatnot, are you going to just barrel through a live fire exercise where they're hitting missiles and ships are, you know, cruising through there and firing off their cannons? I don't think so. So planes still can get through certain areas, but it's almost like running the gauntlet. And if China really decide to constrict that zone even more, then Taiwan will be cut off. And it's almost like fighting a war without fighting a war. If they starve them into submission, the United States really, there's no hot war as such, and you're almost waiting on the outside. Very similar to what Russia did with Crimea, sort of just move troops without badges or identification in, and it's fighting a war modern style where you don't have a conventional army and move in. So yeah, fascinating times.
Yeah. Tristan, did you want to add anything before we jump into what we're going to cover off in the main section?
No, look, Scoop's always your go-to guy for the macro, and he's just about covered the lot. You know, there's obviously still a lot of question marks around China or other, you know, I think the only thing we do know is that it's going to happen at some point. We just don't know when. You know, so yeah, no, there's still plenty of macro to sort of play out before we get a bit more certainty, I guess, on what the next, you know, what the next 6 months could look like. Because if China stays their hand, I guess, for the next year or so, then cool, things continue on as they are, a bit shaky, a bit uncertain, but of course all bets are off soon as they make a move. So yeah, I mean, that's really all I have to add when it comes to the macro kind of stuff, other than things that we're about to talk about now, like the CPI figures.
Yeah. Sammy, you might be able to confirm this. Is the statistic that 73 days after a war has been confirmed is generally when the markets rebound? I know that there were some figures coming out with Russia and Ukraine. So 73 days after that started is when the rebound happened. And that was, and I don't know if it's always 73 days, but that kind of period of time is generally like it's negative until that, based on past experience of prior wars. Is that a thing, or you're not sure?
I hadn't heard of the 73 days, but I did see a chart back when we were looking at Ukraine, Russia, where, like we were saying, when the cannons are really starting to roll through and the war is carrying on, it does take about a month or two for the world and markets to digest what's happening logistically through supply and making sure the war's not spreading and whatnot. And then markets tend to have a bit of a bounce in certain areas. So yeah, it doesn't surprise me.
Yeah, cool. The other thing that we did want to discuss as well is a potential of a bear market, kind of not fake rally, but leading people into getting sucked into plays, getting overly aggressive, and then seeing a fairly strong pullback. So let's just cover off a couple of things here. It really is based upon what happens tonight or today with CPI, and then we can make a lot more predictions of this is where we're going to go next. But right now, just as we see it, we've had really nice formation through here of higher highs, higher lows, all the way up, as you can see, I've outlined with the green circles. Now we've kind of come in and we've hit this level here. And to me, this is definitely the formation of a lower high. So that's confirmation one of a trend reversal. If we drop below really this level here, let me just draw this in.
That's a key Fibonacci retracement as well.
In here, is it?
Yeah, just where the white trend line is, it's confluent with that.
Yeah, cool.
So yeah, if you're right, if we lose it, we're in trouble.
Yeah, so if we do drop below this kind of level around the white line, around where this green area is, so kind of the low 2200s, then we will see that's confirmation two of a break in trend, and that statistically has shown that we will go through more of a negative pullback. It doesn't always happen. You can get to even three confirmations and then a continuation of the rally, and sometimes it is just a short pullback. But also the RSI has crept out of this channel that we had here, and it's started to go down as well. So I'm kind of signaling to be very careful here. We've got this 3-level top now that we've hit this kind of range in the mid 24,000 area for Bitcoin US dollars. This is, and yeah, we haven't really broken out of that. So interesting to see, but I think everything's riding on tonight. What we did want to have a quick look at is just back here in 2019. So in 2019, and sure, you might say we did have other events, but we had this really strong kind of rally in the first 6 months. I remember it very well, because I moved really heavily into Bitcoin at this stage, and I dropped almost every alt, I think, apart from Ethereum, because I knew that Bitcoin would rally first, and Bitcoin it outperformed. I remember doing a bit of research. Bitcoin outperformed over 180 different cryptocurrencies. It came 6th out of 180 in this rally, and that's why we're really strong on Bitcoin being a big mover, even though Bitcoin has been really kind of dragging its feet, and a lot of other cryptos have driven stronger, and that's purely, I believe, because of the Ethereum upgrade that's coming, that might be creating a bit more excitement around it. So yeah, just be mindful, because we had a huge rally up here, 320% almost, or roughly, it probably was, and then we went through this fairly significant pullback. And it is different in the sense that COVID happened. But what I will say is, hey, China could come out and start firing missiles at Taiwan and the US bases. So that is something that can happen, and just to be aware of that. So in kind of a bit of a nutshell is, be really excited if CPI figures come out positively later today. Be in a place of concern if they're higher than what we anticipate and what's forecasted, almost have an expectation that we will see a bit of a pullback in terms of pricing. But yeah, have risk measurements in place, look to start layering in, and then have the aggressive move forward. So Sammy, I'm going to pass over to you now, because I want to discuss what is going to happen for the top section of the newsletter. Reveal a little bit, but don't maybe share everything, because we want people to read it. But yeah, maybe share some of the nuggets that you were sharing, because you shared something this morning that I hadn't actually thought about, but then as soon as I thought about it, it made a lot of sense. So yeah, please do cover that off for us, mate.
Yeah, I think one of the biggest narratives that we should be looking for in terms of a opportunity for investment is Ethereum, and the reason for that is the merge, and it's a little bit ambiguous in terms of details and what it actually means. So I think it's really important that we dive into it and just in a simple format, tell you what to expect, tell you what's going to happen with Ethereum, because towards the end of this year, if the merge does come off, and you have to take into account that maybe it doesn't get pushed back, but if it does, there's lots of things in play that we need to know about. And Ethereum is obviously the driver of a lot of the altcoins in this market. So that's really, really fascinating as well. Oh my goodness, I've just had a brain fart.
So what we were discussing before about Ethereum is given all the updates and the changes, one thing that is worth taking into consideration.
I know exactly. Yeah,
that we haven't necessarily looked at or thought about. And it really reminded me of Bitcoin in 2017 when it went through the hard fork with Bitcoin Cash. There was an upgrade to the network, and people didn't necessarily agree with it. So Bitcoin Cash was formed, and that's very similar to what could happen with Ethereum, given that Ethereum's moving to proof of stake. Think about all the proof of work miners that have warehouses full of ASIC miners getting massive rewards. They might not necessarily want to go through that transition, and really it does come down to the network and the consensus and the agreement or disagreement. And we could see a new style of Ethereum Classic come to play and come to light. So anything else that you want to touch on high level with that, Sammy?
Yeah, I can't believe that escaped my mind. It is just such a big factor in what's going to happen. We could essentially see two Ethereum tokens emerge, one remaining with proof of work and one going proof of stake, because like you said, there's a lot of miners, a lot of vested interests, and a tremendous amount of money and investment that they've made in their warehouses in terms of GPUs, equipment, and they've been mining, and suddenly they're being told to change their business model completely. So that is a really fascinating aspect. So we could be seeing an opportunity where not only does Ethereum rally in a bullish catalyst like we're seeing, but if you own significant amounts of Ethereum or some Ethereum, you could essentially get an airdrop of another Ethereum token. So very, very fascinating. And also there's all these other effects that the merge will have on the Ethereum token if the proof of stake moves forward, because you will see a scarcity model come into effect where the inflation rate of new Ethereum coming onto the market through those miners just suddenly stops. And I think it's up to about 90% gets cut from the market. And I've seen it described recently as a triple halving, like you see in Bitcoin. So I think there is tremendous opportunity in Ethereum, and it will be good to dive into those little points that we covered off just before. So yeah, I'm actually really excited to write about it, and I covered it with our masterminds in our Talking Crypto Thinking Rich session on Friday, which I think was really valuable. So yeah, that's what I'm looking at.
And I will add, actually, because you touched on the masterminds, we're getting a lot of interest recently, which is understandable for the mastermind level. So what I can do, I can drop a link in as well. If you're curious, if you're a graduate, you've been kind of sitting on the sidelines for a while and you want to take your investing to the next level and get a lot more hands-on involved, especially through these stages, because if you really master this is the time to be making serious money. But it's also, if you're really not up to speed with everything, you can make some mistakes in this time. And that's really why we offer that ongoing support and guidance with myself and the team at the next level, as well as doing a lot of personal development and growth, because we have to grow in order to grow our crypto balance as well. So if you are interested, I can drop a link in. and you can book in a call and learn more about what we do at the next level. I did want to have a quick look at this, Sammy, the S&P 500. Just before we do jump into Mr. T's part here. This is it's quite a concerning looking chart, really, isn't it? In the sense that we're hitting this serious range here of what I would say coming into overhead resistance. It's really quite it's a bit of a make or break situation right now, really, isn't it? Where if CPI is good, then we're on, and we're probably going to hit the 200 MA as our next point of call up here, which would coincide with more overhead heavy resistance. But if we don't, then we're probably going to dive back down into some levels that we don't really want to see.
Pretty scary charts are appearing on Twitter, like we highlighted, I think, some months ago with you see in 2008 that you have this bit of a rally and then a complete flush to the downside. So we don't want that to happen. But if you go out to the weekly, there's 2 points I'll probably share here. The S&P 500 is actually running up to the 21-week moving average, I believe, should be there on the blue line. And it's sort of setting on top, and it's very similar to what Bitcoin is trying to do on top of the 200-week moving average. So the S&P, I think if it loses the 21, then it's going to be in a lot of trouble on the week. But if it can hold there, find it as support, I definitely think what you showed just before in the S&P on the daily, it can run up to that 200 daily. But Bitcoin, that 200-week moving average is absolute key. And I think it's really important to remember when we're talking about the S&P and Bitcoin has been a leading indicator of risk markets for quite a few years now. And I've listened to a lot of big traders and macro analysts. It's the one chart they look at pretty much every morning, which is Bitcoin, because it generally tells them what way the wind is blowing, essentially. So I think if Bitcoin is looking good, then the S&P likely looks good. So they're very tightly linked at the moment, but Bitcoin generally is that leading indicator. And if Bitcoin were to lose the 200, I think the S&P has a nosedive, or vice versa. So very fascinating.
What's your thoughts on the strength of the US dollar here with the DXY chart? It seems to be kind of sitting in those higher levels still that we don't really want it to be in, and it showed signs of coming down, and now it's kind of jumping back up. Do you think that's purely based upon the CPI figures that are coming out and potentially the China-Taiwan situation, or
I think
it will move?
I think the dollar
as of tonight.
I think actually, look, I think the dollar up might actually be ready to move down. Just technically, I think it's beginning to weaken, especially when you look on the higher levels on the weekly on the RSI. I think the bulls are starting to weaken, and I think it's just been overbought for a while now. And if they are beginning to trail off in rates, if the expectation of markets are that the Fed is going to stop tightening in the next, let's just say, 6 months, then dollars will begin to be sold off in the short term. But the mid to long term, dollar is just where you want to be in terms of fiat currencies, because emerging markets are getting killed and they want more US dollars. There's a huge demand for US dollars in the world right now. So I can see it having a pullback maybe down to that 102 line, absolutely, and maybe down to that 21-week moving average at some point. Whether that's now, I'm not sure. But to me, the dollar looks like it is at a weak point where it wants to consolidate further.
Do you think that the dollar will respond to the CPI figures tonight?
Oh,
it'd be fascinating to look back on how it responded previously, but I think the dollar really responds to rate rises versus CPI. It could be.
Yeah, because I think I asked because from memory, I'm pretty sure it was a bit of a rally on the dollar last time the CPI figures came out. I could be mistaken. That was
I think you might be right in terms of a leading indicator, because if the CPI is at record levels, then the market suddenly has to price in that the Fed's going to have to go harder than what they have previously. And as they raise interest rates harder, the monetary supply gets tighter and there's less US dollars in the system, it's scarcer. So dollar obviously will go up. People want dollars more. So I can definitely see that dynamic. But I think if we come in a bit more neutral and we just hit maybe forecasted and we're not really pushing the CPI higher, then the dollar might have a bit of a pullback. But again, I think it's all very short-term stuff just based on the macro. So unfortunately, I feel like we need to see a bit of a decoupling for Bitcoin to really rally. or the Fed cuts interest rates, and that would be net. So the Federal Reserve is getting priced into futures markets that they're going to be cutting interest rates by Q1, Q2 at the latest next year. Who knows if those markets are right, but I sense that they might be right based on the structural conditions in the markets.
Awesome. Mr. T, I'll bring us back onto the main screen now, and I will hand over to you for the great reveal of the exciting thing that you're going to be delivering this month, instead of doing an FA. So do release, because I think this is going to be really, really pivotal for everyone as well, keeping up to speed with everything.
Cheers, Joe Bro. Well, I think those that have been with us since pretty much, the first and second editions of the newsletter will be more excited about it, because we get to go back and reflect on, provide some updates for all the projects that we've covered so far. So depending upon the scope of it, we're going to at least produce around a dozen projects that we've already covered in insane depth. So no need for me to dive into the nitty gritty nuts and bolts of it. Just talk about, what's happened since we covered them, and what we have to look forward to going forward with each of those projects. And there's a lot to talk about. There's things like we've touched on previously, Polygon basically partnering up with Disney more or less and bringing out that ZK EVM equivalent roll up proposition, which is like a pretty bullish. All the things going on, with like Matisse and all that kind of stuff, because we know how deep everyone is on Matisse, and obviously I'm pretty up to speed with what goes on over there for the most part. Avalanche, like we previously covered Avalanche, and that's comparatively, if you look at the charts, has just been going on a march. So that's had a really good, since we covered it last month, that's been having like a really good price action. So it'd be good to get to the bottom of that, because I think there was actually some more news that had come out shortly after we had published that edition on Avalanche, and then there are, a bunch of other things as well. I get to talk about the fun stuff like Solana having like the 5th or like the 8th outage, or however many times they've had an outage now. And that's a risk that we highlighted when we first covered it, is that it's so centralized, it's likely to have some outages, and sure enough, it has. So, I'm not, I'm happy about it in the sense that at least we could accurately highlight a risk, but pretty peeved that such a big project just can't get their shit together, excuse the French. So there's heaps for us to go over, and I think there'll be a lot of value for, all our long-time subscribers to just get a little bit of an update, and we'll see how it looks like going forward, because as everyone knows, we're tinkering and we're trying new things over here as well, in terms of how we deliver this content, because I know a lot of you guys, some people might be happy to sit down and read 90 pages. Not everybody is. So we're also, just to give everyone that heads up too, we're thinking of how we deliver this, whether going forward, we'll release, say, scoops signals at the end of the month and do fundamentals in the middle of the month. That way you guys get that more regular delivery of content. It's more digestible. And like I said, you're not just getting whacked with a 90-page, newsletter. While it's all crammed full of awesome content, like not a lot of people have, the time to smash through that. So we appreciate that. So we are exploring new ways to, deliver that content to you guys.
Yeah, absolutely. And it's probably worth mentioning as well. So the CCI team will be in the Gold Coast next month. Is it September?
I think 14th.
Yeah, that's right.
I could be wrong.
Yeah, so
right.
The guys will all be wearing CCI tops, so you'll be able to identify who they are. If you do see them, or if you plan on going, be sure to go and drop in and say hi. Touch them in real life. They are real people, not just digital avatars that I've created. Imagine that, I'm sitting behind the screen doing puppets. So yeah, please do, if you go to that event, drop in and say hi. Unfortunately, I won't be there. I'll be in Italy, I think, at that point in time. So,
unfortunately, I won't be there. I'm just going to another beautiful country. Like, God damn it, Joe, bro.
Yeah, I'm only mouthy.
Yeah,
I'm so happy for you.
Yeah, I'd love to hear if anyone does go and anyone catches up with the team as they float around. So Apart from that, thank you so much, boys, for delivering this. And again, if you haven't signed up for the newsletter, and if you are a graduate and you're considering the Elite Mastermind level, we're dropping a link as well. If you want to have a call with the team just to see what that's really about and what we offer at the next level, and yeah, how we continue to get the results with clients that we do. So appreciate your time, everyone, and certainly appreciate Mr. T and Sammy, all your effort and work that you put into not only the newsletter, but what we do here at CCI. It's phenomenal work, and I think the support is really what helps everyone get the results that they do and stay confident and focused through this time. So thank you to you both, and as well, thank you to all the clients as well that allow this to be possible. Otherwise it'd just be Sam, Tristan and I chatting amongst each other, which is still a blast, but it's always
forgetting what to say.
Yeah, that's fantastic. Cool. Over and out, gang. Until next time. Anything that either of you wanted to share, sorry, before we do jump off?
Oh, my literal outro is just an outro teaser for everyone. It's just cough, Peking ducks, cough, and that's it. I'll leave it at that. I'll let everyone, that the P-cores know what we're talking about, and so does Peking Duck co-founder Scoop. But yeah, just throwing that one out there. I'll leave that to your imaginations.
Cool. Sammy?
I'm good, mate. I think I've said my piece.
All right, over and out.
There on.
Till next time. Ciao, gang.